Yo, what up? Again, this is Toby C. Today we gonna analyze Euro USD. As you can see, we're already inside on Euro USD on a daily time frame. Let us analyze this. We will be using trend line and also we'll be using support, demand and supply, support and resistance, because those are the basics and the most important in the market. Because you see on the market when it's on the supply and also demand, on the support and on the resistance, or it's trending up or it's trending down, because those are the key things you need to see. Those are the basics things you need to do when you are just uh, opening your charts and want to analyze. You need to apply those things first. Let us now check the markets, the current price for a daily time frame. We can clearly see the market, its consolidation is trending sideways. Now let us mark the zone where the markets touch market return. Those are the sensitivity areas. Those are the sensitivity areas where the market touch market react, or market touch market return. We check. Now we can see it's been uptrend. Now it's a little bit of downtrend. Market needs to be an uptrend to touch this zone before it come down to this zone. But now it's failed to come to this, to break above this, Okay, you can see first market failed here. It failed again. So what do we need? What do we expect now? Market push to the downside. Market did push to the downside on the daily time frame. Now let us dive in deeper into 4-hour time frame. On a 4-hour time frame, you can see the market is on a big support here, where the market needed to buy when it touched this zone, because market failed to break. It's pushing to the upside, even though the market was a little bit of downtrend here on a 4-hour time frame, but now it pushes to the upside. Now let us do something like this, apply this diagonal trend, because the market once was here, it needs to come again and finish the 90% roll. Since the market is playing above this diagonal trend, I can still call this market as a uptrend, even though we have a little bit of a downtrend. But now you can see we touch this zone, we also push to the upside. Now let us fix the line, because when you put those sensitivity zones, when you put those zones here, sensitivity lines here on a bigger time frame, on a smaller time frame, you need to adjust them. You can see a beautiful diagonal trend line here at the bottom and here on top as well. What did I told you? I said the market touch, or at that time market will react, it will sell or buy. Now you can see it's a first touch, second touch, third touch, market sold massively. You can see here it's a first touch, second touch, third touch, market bought. Those are the confirmation you need before you do an execution. Remember, now you know the market was trending down. It touched the trend line for the third time, even for the fourth time. It would be a big confirmation. But also, market failed to break this zone first, second, third. It failed to break this zone. It touched it for the fourth time. Market has to push up to the upside. Now I connect my line from this zone to this zone, because I know when the market trending above this, it's still an uptrend, even though it can make those correction in between, because this is an impulsive correction. We need another impulsive push to the upside. Now let us dive in deeper into 2-hour time frame, because if it wasn't that much late, we should have executed here, because we can even see the diagonal head and shoulder that the market is reversing. You see, our execution was here. We should have executed here, because market came down here, touch, it breaks this zone. It breaks this zone. You see this zone is broken. Now push to the upside. Come back, retest on a value gap. You see this is a value gap. They call it value gap. It come here, it touch, and it push to the upside, which means our execution should be here and push to the nearest. I'm talking about the nearest zone, nearest sensitivity that is around there. How do you know that it's the nearest? It's because of the market touch market return. It's because you mark this zone before you even come to this market. Now, see, this is 1:4. 1:4 is it's a beautiful trade that you can execute because our minimum is 1:3. But 1:2, it's good also because you make some, but 1:1, it would be like when you're executing a lot of position, then once you make 1:2, 1:1, then you can just close all your orders and stuff. But you see, we should have executed here. But now what you can do next, now is that when the markets come back to this trend, it will be touch for the third time we execute again because this is what? This is first touch. This is second touch. We're waiting for a dead touch. If markets come down here, we push up to the upside. Okay, now we need to adjust this thing and we need to aim this zone. Why I'm aiming this zone? Because I see some sensitivity areas here. You can see the market touch, market touch, market touch, market touch, market touch, even here. So what is this? We call it a sensitivity zone. That is why the market 10 year, because you need to find out why the market turns here. It cannot turn out of nowhere. Always market 10 where it's 10 before. That is why you see the market 10 here, which is our 1:3 we have been made here with this trade. Now we're waiting for what? If the market breaks above, then we continue with uptrend. Then we'll be aiming to this. We'll be trading between these. This is 1 hour time frame, which is a huge gap. This one, this is a huge. You can make some money here, a lot of money here. But the market, if it decides to come back here, it will come to this trend line, then it will be touch for a dead time and it's pushed to the upside. And even if it decides to break this, some others will fall into trap, think that the market has been broken and market will need to push to the downside. Also, confirm from these zones because this is the support. Our support has been not broken yet. If the market decides to come down here, push, then we buy again. It will be our third touch. Remember, because this is first, second, third. But if the market come breaks here, don't you think the market will come to this and push to the downside? It can also do that, but remember, look what market did here before. You see, this is sensitive area as well, but the market failed to break this. It can also come here, touch here, and gain some set and push to the upside and break this zone of a downtrend line. Break this zone and push to the upside. But for us, if the market breaks here, let us not jump into sell. Let us wait and see if the market breaks here and retest and push to the downside. Then our execution will be around. But for now, we are still on a uptrend. Let us now dive in deeper into the remaining time frame. I want to check some other stuff. I can now on a 30-minute time frame and see very well. Let me remove this thing. And remember, we need to make our charts clean. We need to make our charts beautiful at all the time. Let me remove this as well. Let me remove this as well. Why am I removing this? Because you already know that the market might turn here and stuff. But what I cannot remove my sensitivity areas, my zones. I cannot remove my zones because even when I'm analyzing on a smaller Yeah, because sorry for that. Sorry for that. So it's a bit of network. Because you can see the market is been beautiful uptrend. But before the market comes to this zone, now let us trade on a 30-minute time frame. What do we see on a 30-minute time frame? On a 30-minute time frame, we see a beautiful uptrend, but it's rejected here because it was rejected before. Now, what do we need? It can form even a universe, or can form a head and shoulder, not a universal shoulder, can form a head and shoulder here and push to the downside to finish what's a 90% roll, which is will be these supports here at the bottom. Now let us mark our beautiful uptrend here. The first touch, we have a second touch, we have a third, we have a fourth touch. Yeah. On a third touch, we should have bought here to this. These are so many pips. Let me calculate these pips here. Let me see here. You see, those are 25 pips. 25 pips are too much. And another thing, what I will advise you all is that don't look for much pips like 50 pips and 100 pips and stuff. 10 pips are more than enough. 20 pips are more than enough for you. As you're escalating, going up, you will be increasing those pips. And pips doesn't matter. The matter is a capital, how much you funded your account with. So check sort of, yeah, what I see, the market can break this zone and come out of this box and push to the downside. Or else the market can also do what? The market can also push to the upside here and form what? A triple top. Why I'm saying a triple top, it's not a double top. It because yeah, it's a first one, second one, it will be a third one here and push what to the downside. So that's what's gonna happen. But we're not leading the market, but we are following the market. The market can also do this and come here and push to the upside. What are we doing right now? We are predicting the direction of the market. If the market does this, we will execute, or if the market doesn't give us this, we can also do that. We're planning our trade and we will trade our plan. That is why we're analyzing before we do any execution on a market. If you watch this video till this far, which means you like this video, please like, subscribe, and hit the notification button so that you can notify once I upload. You can find my number on the bio. You can WhatsApp me. You can also follow me on Instagram and see how I am doing. I can also available on the telephone as well if you want to give me a call or whatever. I'm based in Devon currently. Thank you. Peace out.